Hello value investors, thank you for joining me. Today I want to talk about Dropbox and why I believe the Dropbox is a compelling investment. So we're going to talk about its revenue growth rates, then we're going to discuss its profitability profile and how that compares with one of its peers. And then we're going to bring that all together and talk about its valuation. But if you haven't done so already, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you the stocks I own and why, with a balanced argument for the stocks I own. So let's get started. So Dropbox is a company that I've been bullish for a while, and it's been really choppy out there, and the past 12 months, as you can see on the graph here, it's been all over the place. However, I think that something could be brewing here. So recently Elliott Management took out a position, they say approximately more than a 10% position in the stock. That could be interesting in and of itself, so it's an 800 million position, so that could be interesting. The other thing is that Cloudera, it's not really a Dropbox competitor, but it's kind of like in the same field of content management, and that is being bought out at 5.3 billion, and it approximately comes up at about 5.7 times forward sales. So Dropbox and Cloudera and Box, all these three companies are very similar growth rates, growth profiles, and similar multiples that they kind of been bought out or trading at. Okay, so that's what I want to keep in mind as we go through. So Dropbox, actually, I feel is kind of growing a little bit faster than Box. I haven't put up the comparison here, but it's kind of in the ballpark of 11%. But if you think round about 10%, that kind of gives us a bit of a margin of safety there. So it's a very low double-digit growth rate story. So you're not really paying, you're not paying a large multiple for growth, and no one's expecting this to be a high growth story. Furthermore, you have to keep in mind that there's so much competition in this space. You got stuff like OneDrive, you got Alphabet's Google Drive. There's so much, and it's very difficult for someone like Dropbox to get the freemium subscribers, the people that subscribe for free, to become premium subscribers. It's quite difficult, to convert that up. So it's a bit of a competitive field. So, but I think that a large part of this is already factored in here. One thing that I do like very much about Dropbox is that the CEO has a large share ownership. I think it comes up approximately 20%. I haven't put this here on the graph, but it's approximately 20% thereabouts that he owns, but he holds the voting shares. So the voting shares, as you remember, really have a lot of weight, because any movement in the company, he has to basically vote where it's going to happen or not. So when Elliott comes in and takes a position, they would have talked with Andrew, and they would have kind of spoken about what their guidance, and there'll be a bit of a chatter. So Elliott would be firmly already aware that they don't have a lot of say in the company. They're very much left down to how Drew wants to manage his company going forward. What I will say is that when they're not a very acquisitive company, Dropbox, but when they have done, for example, the acquisition of HelloSign, I think it might have been approximately 18 months ago now, it was a very good acquisition because it has really nothing to do with content management, but on the other hand, it's their fastest growing product for several quarters now that I've been noting this. So it turned out to be a very prudent acquisition, and it wasn't, they weren't squandering capital. So it's something to kind of bear in mind, that when you're investing alongside management that has a lot of skin in the game, sometimes that kind of plays out favorably. Not always, but often. So Dropbox has this target of 2024 reaching a financial target of 1 billion free cash flow. So the stock right now is at approximately 10 billion. So you're kind of paying 3 years out a 10x multiple to free cash flow. In tech, you're not going to get many of those. In tech, you're paying 10 or more times sales, and there's no free cash flow inside. So this is really interesting because it's one of those few companies that has growing free cash flow, and it's not growing a lot on the top line, but they're able to cut out excess expenditure to really grow up that free cash flow. So it's kind of like, that's kind of interesting, I feel. just to compare here, so I've put a comparison with Box. Box is a kind of a competitor to Dropbox, and Box has margins of approximately 73% gross margins, and over the same calendar period Dropbox is coming up at approximately 80%. So the margins of Dropbox are much higher, so there's a lot more wiggle room in operating leverage that can play out favorably to Dropbox rather than Box, even though they're very similar companies doing similar things. This translates further down the income statement. You can see here that operating margins for Box come up at approximately 17%, whereas this latest quarters for Dropbox reached 30%. So things are, for 29%. So one company operating margin 17%, the other company Dropbox 29%, and that's right at the midpoint of their financial target. So the financial target for 2024 is somewhere between 28 to 30% operating margins. So all in all, the company is, in my opinion, a higher quality business. This could be something that's quite interesting, and it's priced very similarly, as I mentioned, to Cloudera. It's priced very similar to Box, and they're all trading at approximately 5 times forward sales, which in tech right now, there are not many companies that are A, trading a single-digit sales. There are a few, but not many, or B, highly profitable like this. So I think, all in all, I think that if you take away that the outlook is not particularly compelling, I think that there is an interesting opportunity here that could be worthwhile considering. As always, thanks for listening, and don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns, and I'll tell you the stocks I own and why. Thank you.